So, Damian, it's very difficult to have any kind of conversation these days without talking about what's happening in the wider world because it's fast and furious, whether it's geopolitics and US and Ukraine. In fact, I don't think you can have a conversation without Ukraine somewhere coming up. There's just so much going on. Of course, most people who know us, know the firm, know our investment approach, know that we're not trying to anticipate every move and nuance and not trying to react to every move and nuance. But that's not what we're doing. But we are obviously paying attention.
Mhm.
And I think people do expect to know that we are incorporating and aware of what's happening out in the world to some degree. So let's talk a little bit about the wider context and what that means and doesn't mean for Maseko and clients and invest portfolios and so forth. Um, the two top items, of course, are Trump and what's happening in the U.S. broadly,
Right.
and Ukraine. And there's obviously now some linkage there
Hmm.
uh, with Europe. So suddenly, what Trump is doing and not doing in the U.S. and what that means for U.S. interest rates, what that means for U.S. inflation, what that means for U.S. jobs and U.S. global productivity and tariffs and global trade, all of that stuff, rather than trying to go through individual items, all of that stuff is creating a general impression about U.S. connectedness to the world, but also U.S. trade and economics and so forth. And that seems to be sort of amplified through the prism of Ukraine in terms of the sort of pullback and sort of this European stepping up and stepping forward, which maybe has obvious implications with defense spending, but much more broad, maybe around European independence and activity and what that may mean more broadly. Um, and maybe we're seeing that already in markets in terms of sort of where we're seeing relative performance. But why don't we try and talk through some of these items,
Yeah.
show that we're aware of them at least, and to the extent that they factor into how comfortable we are with how we're positioned, that would be interesting.
Yeah, absolutely. I mean, I think it's important maybe just take a step back
Absolutely.
and just say, take a deep breath
Yes,
and
quite a few.
and think kind of maybe of just the wider context and going back even the last few years.
Yes.
We're all veterans of a pandemic, and the implications. And I'm sure you had to talk clients through that. And that was a very difficult time. And I think, we will get through this. There's a lot of media attention on what's going on,
Yeah.
but actually, a lot of that is going to be headlines and noise. Not to detract from the fact there are some substantive changes,
There are
probably, and
people's lives being impacted,
consequences.
and you have to go out for recognize that there's people that are in hardship that weren't before and will be in the future, and you can absolutely feel that. You're absolutely right. Yeah.
Right. Absolutely. And I think there is this sort of people talk about the kind of this new order in that the U.S. could be relied on as the policeman for the world, and there were trade deals done, and there was um, a world order that kind of feels like it's been upended over the past few weeks,
Yeah.
and nobody knows where this thing will all play out,
Indeed.
but we do see the political pendulum move about,
Mm.
and often it goes one way and it just to come back another way over for people who have long time horizons like ourselves, right?
Right.
And that wouldn't be surprising either. We've got things like midterm elections in the US, which could be interesting. That's only in 2 years,
That will come very quickly. I mean, the noise from that will start to build in a year
right?
already. So yeah.
And I mean, the US economy has been humming along very nicely,
Yeah.
but questions arising. The data, we call it some of the soft data, which is like the survey data,
Mm.
has coming a little bit sort of weak,
Mhm.
and starting to see that kind of cause concerns.
Okay.
You're starting to hear people use the R word, recession. Again, it comes up every few months, doesn't it? I mean, over the last couple of years, everyone's kind of got a bit excited about the impending recession that never
It
happened.
happened. Yeah,
Yeah,
exactly.
it still
Yeah.
hasn't happened. So we have to remember, I think, that the historical context of all these things
That's good perspective. Yeah.
and have that perspective. But it is important, I think, when I think I wrote to clients at the beginning of the year about how difficult it is to forecast what happens in markets, and how professional forecasters or investment strategists have got it so wrong,
So often.
so often. It's incredible.
Yeah.
And, they probably from, beginning of January to March, they've had to change and revise their forecast because of things that have happened. I think a lot of people were, when we came into the beginning of the year, there was this America first perspective, this theme.
Yeah.
And why should there were clients asking questions like, why should I be invested in anything other than US equities?
Right.
You know,
Yeah. That was the dominant
that
resort
seemed to be done because US equities had performed better than
and
international.
really a subset of U.S. equities. Right?
Absolutely. A
Yeah.
very small subset, a very concentrated technology focused sector had performed particularly well. And I wrote about that at the beginning of the year that, we were very cautious on that. And and America first has translated actually into Europe doing quite well. People are saying it's mega rather than MAGA. This is make Europe great again, has been the sort of indirect, the unintended consequence.
Right.
And this is where it
And
gets
just to be
difficult.
clear, do you mean the economy? Or do you mean markets and prices?
Both.
Okay.
So, and I think while America, the focus on America has been about how they can become a stronger economy, it has had this unintended consequence of other countries around the world saying, well, we now have to think about not relying on our trade links in the same way, not relying on security links. And that has big repercussions beyond markets. And there will be an economic impact. And what's been interesting the past few weeks, I mean, what's happening in Germany, right?
Yes. The reawakening of Germany in a proper way. It's incredible. Yeah.
I mean, who would have thought Germany has been so fiscally prudent over
Exactly.
the last, 40, 50 years.
Mhm.
And now it looks like it's going to take that fiscal break off
Yeah.
and it's going to start spending money. It's going to start spending a lot of money on things like defense
Yeah.
and infrastructure, presuming they can get this through Parliament. But the numbers that are being talked about are pretty remarkable, aren't they?
It's just stunning.
Yeah,
Yeah. I mean, they're transformational, right? As you were saying, it's upending the world order. That's one of the big specific examples of that.
absolutely. And I think that's going to be interesting one for investors to kind of grapple with is the timing of that and how it'll impact portfolios.
Can I take you back for a second? Just I want to make sure that people who don't follow markets every day just get a bit of an update on the U.S. You were talking about the U.S. performance and the concentration in the growth equities, tech stocks, Magnificent Seven, and so forth. What's happened with that? That was such a theme for such a long time.
Yeah.
There's all this other noise going on. We're talking about relative performance in Europe and so forth. What's happened with U.S. markets and this driving Magnificent Seven tech group?
Over the last couple of years, the Magnificent Seven, which is this grouping of large US companies that are invested or have been benefiting from the AI theme,
Yes,
artificial
dominant
intelligence.
AI theme. Yes.
Exactly. And that has driven those companies to be a large part of the US market. And close to 40% of the S&P 500
Still stunning.
in 7 companies. And I think this is interesting in the sense that a lot of people went into passive investing. It was, it's been the kind of de rigueur to go passive for a lot of people over recent years.
It's low cost, long-term performance.
Why wouldn't you do it? Diversified,
Yeah.
but
Hmm.
not so diversified anymore. In fact, a lot of people made an active decision to go into passive, but they've now passively become an active investor
I like that.
because of such a concentrated portfolio
Yeah. Outside of their control.
outside of their control. And they thought well, I went passive. I just bought the S&P 500. That's 500 companies.
They took it over.
I took it over and it's become like a portfolio, an active portfolio.
Yeah.
So that's been really interesting.
Yeah.
And I think that's what makes me, really excited about our approach is our belief in diversification and not allowing our portfolios to get sucked into that level of concentration.
That kind of concentration drift or
Right, exactly. So year to date, you were asking how have they done? Not very well is the answer. So the Magnificent Seven is down about 10%.
wow.
Now they've been up a lot, so but it's in a relatively short period of time they've been down quite heavily, And they were, many people said, priced to perfection. There was no room for bad news for those companies,
Right.
um, and now they're starting to, it looks, waver a bit, and we've been cautious on those for some time, and it seems to be playing out now. This thing, there'll be markets will be volatile. We're not making any forecasts of what
Right.
they will do this year,
Yeah.
but it wouldn't surprise us that it's a more challenging environment.
I can't help myself. I just have to take a shot at this because there was so much hype about both AI and blockchain, effectively, Bitcoin, after Trump's election and before his inauguration, that he was going to turn the U.S. into this AI-driven, Bitcoin-driven, et cetera, and so forth. And there was a huge amount of hype
Hmm.
that somewhat reflected in those stocks, saying, "Wow, this is all going to take off." And what's interesting, of course, is we've seen, in performance-wise, the opposite. Right? We've seen some of these AI stocks trading down. We've seen the Bitcoin is trading down, and it's this constant reminder of the dislocation between everything you think you know and all the hype and what everyone's talking about, and what actually happens in markets. It's just I can't not say it, can't not highlight it.
Right. And be careful of the narratives.
Yeah.
If everyone is talking about something, then if everyone's bought into it, then who's going to buy it? Right? Who's going to be that extra marginal buyer?
Yeah.
Because everyone was already filled the boat with those positions. So we're very wary of crowded markets, whether it's in equities or fixed income, and because valuations get rich, and you've got to be careful. History teaches you, you know. And I think the AI theme, I mean, we believe AI is going to change society, but you've got to be careful because it's going to involve a huge amount of capital investment.
Mhm.
And there's hundreds of billions of dollars being invested by these companies, these Magnificent Seven. Maybe not all of them are going to do well.
Yeah, it's not really clear where the returns are going to come from exactly for
Right.
all that investment. Yeah.
And history shows that capital, when you have a lot of capital going into an industry, and the airline, for instance, the airline industry is a perfect example
Mm.
where, as I say, if you want to be a millionaire in the airline industry, start by being a billionaire. It's being a challenging time. I mean, you just really haven't made money out of airlines over
I
a long
remember
period of
seeing
time.
that study, that if you were just in it the whole time, the boom bust cycle of that is hard to get net positive returns. It's about timing rather than
Right
long term. Yeah.
now, we all benefited. I mean, you're on planes all the time.
Not anymore, but I used to be. Yes. Yeah.
And we all life is better because we have airlines,
Yeah.
but investors never made a lot of money.
Yeah. Yeah. Not consistently over time, at
And
least.
you've got to question, when you put a lot of capital into something, a new technology, society may benefit, but it may not benefit the investors.
Maybe not this investor. It might be that one exactly.
Exactly.
Let me ask you two really hard questions. Uh, so the first is going to be about Ukraine,
Mhm.
and it's going to focus on the fact that when that all started, it generated really seismic global dislocations. Some in energy, around global trade, right? There were some real massive ramifications that reverberated, I think, more than anyone expected on the day of the invasion in terms of how this was going to affect around the world. Now there seems to be a lot more noise about getting this resolved, whether it gets done. We won't talk about the politics of how it gets done and who's around
Mhm.
the table, but there seems to be a lot more talk about whether this gets done. And it triggers sort of the similar question, right? If there are potentially obvious or seismic implications to that, whether it's in energy markets or other types of things. So that's one very difficult question. I'll see if there's something you'd like to add to that. The other one is around interest rates, which of course is important for investing in general,
Mhm.
for equity valuations, for bond valuations. Interest rates are important for economies, just people borrowing money, et cetera. And we had been in this cycle of central banks trying to bring inflation down, and not sure what that's going to look like now with tariff wars breaking out and sort of the economic cycle seeming to shift.
Mhm.
Maybe we're at a different inflection point around what was happening and we thought was going to be continuing to happen with both sort of inflation and interest rates. And if that doesn't keep happening, if this is the new normal, if we're not going to keep on that trend of lower inflation, lower interest rates, is there anything that we think about differently? So two really sort of tricky questions for you.
Okay, there's quite a bit to.
Yeah, you can take them in whatever order.
um, I mean, on Ukraine, it's difficult to know how this plays out,
Yes.
the scenario. I mean, hopefully the conflict gets resolved. That would be great for all those impacted. Um, from an economic standpoint of EU, it's difficult to know how that plays out. To what extent will European countries have an investment or an involvement in rebuilding and things like that? What to what extent can Ukraine help with the energy needs of Europe? These are all things that
Kind of Owen questions.
very difficult to and I think that's why I sleep well at night is because we're diversified. We're not
You
saying
don't have to know the
it
answer.
doesn't. Yeah, we're not playing on a particular scenario because you just don't know how that plays out,
Right.
and that's one we'll certainly be keeping a close eye on. But I don't think the market impact, if it was announced tomorrow, there would be some relief rally. I'm not sure how significant it would be until people feel that it's a sustainable, peaceful
Right.
proposition, and that remains to be
That
seen.
will take some time for that confidence,
I
right?
think so.
Yeah.
I
Yeah.
think so. But on interest rates and inflation, this is quite interesting. I think we've gone through the inflation in 2022, which caused interest rates to really spike,
Yeah.
and that was a problem. And markets didn't really see that coming. The Federal Reserve said it was temporary. Don't worry about it.
I remember.
And then they were like, "All right, we got that wrong.
Yeah, right.
Worry about it."
Exactly.
And they hiked interest rates pretty dramatically. I think there are inflationary forces potentially coming down the pipeline now. We don't know to what extent tariffs are going to impact on prices,
Right.
and because currencies might weaken as well as tariffs going up to
Exactly.
offset that.
Yeah.
So there's a lot really in the mix there.
And of
And
course, even what's happening with tariffs is like on one day, off the other day, it's in place and it's gone, and then the rates are changing left and right. So there's so much uncertainty and instability in that it's hard to sort of extrapolate.
exactly. But I think at least we're talking about it, right?
Yeah.
We can see that inflation might be coming our way.
Yeah.
So I think markets are digesting that.
Sure.
It won't be as big a shock
Right.
if we see prices rising.
Right.
And inflation is more of a concern if it's sort of if it's happening kind of on a secular basis, year in, year out.
Like compounding kind of
Yeah,
stuff.
exactly. A one-off is something that we can see through that. Okay, the prices are going to go up for the tariffs, and then they potentially stay there or may fall.
Mhm.
There's a demand impact of those higher prices. Are people going to buy the same level? Who knows?
Right.
So, um, it's hard to see right now. Now, the dynamic can change around energy and other aspects, but for the foreseeable future, it looks like inflation is not going to get completely out of control. It will move up, and markets will get excited about it, but I don't think it'll be anything like in 2022.
Look, I'm just waiting for a year where we're sitting down at the beginning of the year and saying, wow, what a peaceful time. There's nothing going on. And, 1 year we have COVID, 1 year we have Ukraine invasion, 1 year we have the most electoral cycles ever happening in the world. It seems like we're always going to the year with some kind of noise and so forth.
Because there's always something for us to talk about, George. No shortage there.
Permanent employment. Any parting words? I usually get to ask you this every couple of times we sit and talk in terms of, you know, if there is anything that we haven't talked about that you either are really looking forward to, it's like, wow, I really can't wait for this to happen. It's going to be a great thing. Or, ways in the back of your mind. I know you sleep well. You've mentioned it already, but the ways in the back of your mind saying, wow, if this does develop, this is something that's going to be really, this is sort of specifically a problem that I'm sort of keeping an eye on.
When you look at markets at the moment, I think they were very expensive in the US, and that's come back. And what's been different this time is that usually when the US sneezes, Europe catches cold,
Right.
and often European markets fall more. than the US market.
Yeah.
What's different this time, so far at least,
Mm.
is European markets are doing better
Yeah.
than much better than US markets. And that is showing diversification in a way that hasn't played out always in recent years. So I'm probably more optimistic about that aspect of things
That's good.
and that diversification benefiting. And we're making some changes in the portfolio. I'm liking the changes that we're making,
Mhm.
particularly in fixed income, and I think that's going to help give us a little bit more ballast if we do get into more volatile market conditions.
Right.
And and I think a lot of the things we've been talking about, like the concentration risk,
Yeah.
that's starting to unwind. And I think that's better for the market overall, that that
Healthier
does start
condition.
to
Yeah.
exactly.
Yeah.
Smaller companies, smaller mid-sized companies, it would be those companies have attractive
Mm.
earnings prospects, similar if not better than large companies,
Right.
but they're not
It's not
getting
reflected yet.
it's not reflected. So
Yeah.
that's something that it doesn't concern me, but it's sort of I'm waiting for that
It's nice
to
to
come.
see
But
that. Yeah.
that's yet to come. But other things are working well, but not everything can be working, I guess, at the same time. But
I still think that sounds like a relatively reassuring place to leave the conversation. So I think that's really useful to hear. As ever, thank you for your knowledge, insights, and the really clear way that you share that with the clients. And can't wait to talk to you in our next conversation.
looking forward